maybe relatively radical, but that we maybe take like 100% fee for all the farms, and then we make some kind of bonding system. So you give your token for the farm, and then in exchange you get Aladdin token for your yield you don't have, and then you get access later to the token we collected for this. And we are thinking this direction. And this also reflects a bit on how we should like select products. So I guess it's still the same. You're looking for long-term value, and so we're looking for projects who have interesting long-term to be invested into it. And I think it doesn't change a lot about our which products we choose, because I guess this is clear for everyone that we're looking for long-term valuable products. And the idea is that could be some form of ETF that we collect like the token who are farmed in a pool, and we are then more like ETF who we as pool members select the projects or the token indirectly for this ETF. And the pool member also could play a role in the day investment, because as we know, not all projects are very strong, or not every product finds traction. If it looks very good at the beginning, some of them will fail, and then it's also our task, I guess, because we have the most insight, to think about how we de-invest or which projects we going to de-invest at which point. But this is later on. But I guess this makes sense for the bull manager also to be involved in this, because I guess if somebody proposes a project, he's very close to this project, and then he also sees if there's a sign of failure, and then maybe we have to react for this. But this is in the future, so we don't have to talk about this in depth. Yeah, so there's like a working group. We discuss about the product, and of course everyone can be in this working group. There's like a channel in the Discord who's called Future Tokenomics. Yeah, maybe it's not only about the tokenomics, but everyone of the pool member who want to be part of this can just join the channel, and we start the document writing about this stuff. And the idea is that these working groups maybe have meetups on the side. They have their own meetups, which is a place to discuss about this. Then, there's like a feedback that, and this is true, the feedback that's coming from Sid, that we have that the voting now, it's the strange thing is that if you, in fact, you should vote 4 times a month, and then because the month is you keep your vote until the end, because you don't know which kind of projects are coming. So if you vote in the first 4 projects, then you don't have any vote left for the later. And I think too we should somehow fix this and change it. And the idea is that there are also like just wrote Sid that we make also like a working group and discuss this, and then we make this change, by the way, that we as a pool member then vote about this change. And the idea is that we find a solution is more equal, that you don't have to wait for the projects you wait for. You want to vote for or vote against it, and then we will see. Last but not least, we see now we have 16 people in this group on this chat, so we miss a few people, or more than the half of the pool members are not present in this call. No, half, sorry. Around half the people present in this call. And this is also a thing I've already talked about, that we are discussing about a code of conduct. And maybe I share my screen just short, that everyone can just read it, what it's all about. And it's more that we say, if you're a pool member, you have to be present 2 times. You have to be present in the meetings, and you have to vote. And yeah, I share it shortly, but it's not. The idea is that we wait until the end of this month, and then maybe we going to discuss this, and then yeah, we tell every Boule member that we will enforce, maybe the wrong word, but if somebody doesn't commit enough time, then he will be asked to leave. Or yeah, maybe this is a good situation, this naming. Yeah, just show it shortly if I find the right window. Just a sec. I had it open. Yeah, it is. So switching back. Share the screen. Yeah. So this is just a draft, but the idea is that so it's relatively soft. So that you vote regularly. So if you have 4 votes a month, and if you miss 2 votes, that you yeah, it's maybe you ask to leave. Yeah, that you shouldn't miss your presentation. Of course, a cycle is 15 weeks, and I guess everyone can manage to make a presentation on his choice date, because there are many dates left. And then, yeah, we expect that people are showing up in the meeting. But this is everything to discuss. It's just not that it's not set in stone. And then what I was adding to is that I would like a system where people can, be absent if they upfront communicate, because some of us, yeah, they have also other duties in their life, and sometimes situation arise where you can't, fulfill your duty. And I also guess that people should tell us that they are absent, for 1 month or so, because if you make a world travel, then you don't have time for this kind of stuff. So this is just a draft, and we are discussing this further. And I guess that's from my side. So we start with the presentation.
This is great, Martin. Thanks for making this. This is, I think, very reasonable and definitely needed. So yeah, thanks so much.
Okay.
I just want to add one point on Martin's comments. So basically, AladdinDAO, right, and AladdinDAO Treasury, right, basically is a basket of prime DeFi assets. So, what does ALD stand for, right? It actually represents the rights to an ever-growing ETF of prime DeFi assets, right? So if that purpose and positioning is clear, right, that can pretty much align the Boule members on what assets we want to look for, right? So what are the assets we are proud to be part of AladdinDAO holding, right? And what we want to hold, for medium to long term. I think we just passed voting on Ribbon, so far, right? And I think we only have one asset which can be listed after 2 weeks of the bull running. I think we probably need to be, a bit more aligned and focused, and just make sure, we can accelerate on the process, right? So we can list, quality assets, quicker, right? To make the platform offer more value to the users.
Okay. Yeah. I think maybe we should make, we should tokenomics or this kind of, maybe we should have a different call for this kind of side discussion, because and keep this call especially for the research. I don't know what's, maybe we have to discuss, because I think we need another place where we can, as the Boule can discuss for themselves who they are. But now if we want to present 2 projects in this call, and it's quite, it's not a lot of time left, somehow.
Yeah. So So you
Yeah,
know,
maybe I don't know. Maybe a suggestion is that we start half an hour earlier, and then people who are like to discuss or to be part of the discussion, not about the projects, then join half an hour earlier, and then we discuss this, and then we can start on the point for the presentation.
yeah. So we're working on product, you know, value prop, and we're working on economic model, right?
Yes.
And you know, with everything we work on, we need to align on the objective, what we're trying to do, right? We're actually trying to build, you know, a massive treasury holding of prime DeFi assets, right? So what are the things, you know, we want to hold in the treasury, right? For mid to long term, because, you know, we
Yes.
don't sell the tokens.
Yeah.
Right. And so, you know, if we do come up, right, the Boule come up, curate, you know, a really valuable, you know, treasury holding, you know, every DeFi assets out there want to be part of AladdinDAO holding, right? Every new asset, new project coming to the market, they want to know what AladdinDAO thinks. Right. That's what
that's our goal. Yeah.
Yeah.
Okay. So shall we switch to the presentation? Sure, this is okay. Okay, so who is first? I think Hassan or?
I mean, I would prefer to go after Convex because my strategy is farming Convex.
Ah, cool. Very nice. Yeah. So Jeff, do you
okay.
go?
Yeah, sure. I
Convex?
can go.
Thank you.
Thanks, Jeff. Didn't mean to put you on the spot, bro.
Yeah, that's cool. We have a
Okay.
Convex session then. Very nice.
Okay. All right. You guys see that?
Yes.
All right. Yeah. So I'll be covering Convex and then partially Curve because it's based off of that. So yeah, Convex is basically a protocol that takes in Curve, locks it indefinitely into VE CRV, and then uses that to control the gauge votes. And so essentially, it's like a layer on top of Curve that allows for people to get boost without having to lock up Curve for 4 years. So essentially, smaller LPs can get this boost, and then there's also a liquid market for staked Curve and free float Curve. So the Curve inflation is completely controlled by the gauge weight. Every week it goes through this voting process, and because the longer the lock, the more vote weight you have. Basically, every serious player is just going to be permanently extending their Curve lock to 4 years. Yeah, as you can see here, there's a bunch of different protocols. Yeah, MIM got really popular and ended up taking a decent chunk of the weight here. Yeah, you basically need a ton of Curve to be able to influence this this vote and accumulate boost. And so yeah, Convex is like pretty much dominates that space. We can look at some overall growth metrics for Convex. So I like to look at TVL. It's pretty much slow and steady growth. It's up to like, I think it's like over 10 billion now. Volumes, the token itself is quite volatile right now. So it's still in a kind of a price discovery phase. And then, yeah, we want to see basically more people are locking up their Curve with CVX CRV. Also, people are staking their Convex, and that the protocol does actually generate revenues. So also interesting to note that Curve is multi-chain. They've deployed to a bunch of different Ethereum compatible chains. So that kind of increases the whole market surface. So to make curve a long-term holding, like we have to see why we think it's a defensible position and why their flywheel, can keep going. So I think that basically every it's the de facto stablecoin swap protocol. So every new algo stablecoin has to create and incentivize the pool here. So for example, MIM became really big through the Meeting-3 pool. There's like a UST one for people that are using Luna. Fei has a factory pool. So like, every algo stablecoin needs this to get on the map. And then beyond stablecoins, right, you have the tri-crypto pool, but you also have the liquid staking projects. So AladdinDAO has a staked ETH pool, and Badger has various methods of wrapping Bitcoin, interest-bearing Bitcoin, and whatnot. And recently there's even like Rook partaking in this proxy battle. Essentially, Rook had like excess treasury funds, and they're debating whether or not they just want to ape into Curve or Convex, I forget which exactly, and unlock that for their protocol income. So you have this proxy battle occurring where like everyone just wants to buy either Curve or Convex as a leveraged way to obtain voting power. And as you can see, Convex just owns a massive percentage of the vote locked curve. Like there's just no other protocol that can come close. And there have definitely been several forks of Curve. Swerve died off. Ellipsis is kind of like whatever, it exists. And actually Convex can claim the EPS airdrop. And then Saber is like the Solana fork. So going into the value accrual of Convex token. Right now you lock it for 16 weeks and then you receive some rewards on that, but you're also eligible for all the fees from the platform. And to maintain that boost level, the curve is issued as CVX CRV, which is the vote locked curve. So essentially the platform is charging like I think it's like a 10% off of the curve incentives of these pools. So like it's a decent chunk. You can either recompound the curve, and then you also get additional like bribes for protocols. This one is like it's run up quite a bit since I originally wanted to cover it. So I look at it more of like a cash flow model. You can look at fully diluted valuation, estimated revenues. So it definitely has some long-term potential. In terms of the tokenomics, very fair. The majority, 75%, is allocated to various forms of liquidity and mining curve pools. And that's great because it essentially allows for a long and slow distribution. Some people think the inflation is too high, they're going to sell their tokens quite early on. And people that just want to buy it and hold it, they can they can tap into that inflation and basically acquire tokens. So it's a balance. Some firms' mandate, right, is just to farm and dump, and that's okay. That's part of the game. So so because Convex is completely dependent on curve, we do have to look at some aspects of the curve token, which is it's a lot less volatile. And we can look at the intrinsic value as like a multiple of, well, the intrinsic value is just the amount of fees that you get for staking curve. And then you also get the, you get paid in curve. and other protocols will bribe VE CRV holders. So this is a massive sinkhole. Like, yeah, the vast majority of Curve is just locked into voting. So even though, yeah, there definitely is inflation that keeps the token price kind of like relatively stable. Yeah, there's not like an abundance of supply that can just come in and tank it very easily. Yeah, so yeah, looking forward, you can't say for sure that like Curve is going to be the de facto stablecoin swap pool in whatever 3 or 4 years after inflation. In terms of Convex, I think it's a very good fit because Convex itself is not a yield aggregator, right? They just collect the boost and allocate the gauge weights for you, and what you want to do with the Convex token and the extra boost rewards are up to you. And yeah, there's no management fee. Like you're in charges like 2 and 20, I think. And so the fees apply to only the Curve rewards. Actually, if you look at the site, the bulk of the rewards oftentimes comes from not just the boosted Curve, but the Convex and the incentive token. So yeah, the first strategy I would propose is to use the Curve as a base. So you deposit into the platform, receive the CVX CRV, and you can LP that. So the LP receives basically a decent chunk of boosted CRV and CVX. And you can debate whether or not it's a more effective use of money to own CRV or CVX, but at the end of the day, by farming this, you just accumulate both, which is pretty ideal. And then you can go ahead and restake that CVX for additional rewards. And yeah, actually, so if this Curve CRV, CVX CRV pool becomes unbalanced, that's okay, because you can just withdraw the locked Curve and then stake it on platform. So the staking rewards are slightly different. The composition is a little bit different. You actually get some of the 3 pool rewards, which can then be again recompounded. So yeah, and then the so the locked CVX, that's only a 16-week lock. The base APR is not crazy, but the juice is coming from basically bribes. So I believe Alchemix, Frax, and Spell have been allocating a certain amount of their tokens to bribe either the vote locked Convex or vote locked Curve to incentivize their pools and get more boost. Yeah, so that pretty much covers it. If there's any questions.
Great presentation, Jeff. I just want to signal I am 100% supportive of this. This is a farm I've been in for months since it started, and it's killer yield, and you kind of checked off all the boxes of I think like you're earning blue chip assets. It's easy. I think it's battle tested just because it's been around for such a long time and kind of has all the check boxes about like being audited, and so yeah, just nothing else to add here. But I love this. This will be a definite yes from me.
I think my questions are just around UI, basically. Like, if we're kind of targeting retail people that come, straight to the AladdinDAO app, like kind of how we would want to, I guess, like expose this. I think it's a great project and great presentation. But just kind of wondering about if you've thought about like UI for this.
Yeah, I would actually yeah, like to talk to the core devs about that. It would be like kind of, yeah, I think it's kind of complicated for users to come to the Aladdin site and be like, oh, I have to go to Curve and then stake there, and then I have to go to Convex and then stake there, and then I have to go to Aladdin and then stake into their vault, right? So yeah, it would be definitely nice to like simplify that process.
Out of
There is an
curiosity. Oh, sorry, go ahead.
Oh no, just I don't think it would fit in this situation, but if we ever need LP tokens in the future, which I think doesn't apply here, but if we ever needed those, we can reach out to Zapper. Zapper actually is all for enabling other DeFi projects to be able to use Zaps. So Yearn has used those, and that could help to simplify the UI issues with some of these farms. But sorry, Rodney, what were you going to say about this?
Yeah, I was just gonna ask about the current APIs for like this strategy and how it's changed over time.
Maybe I can answer this. The thing is that Convex is voting, because Convex itself is a bit complicated. Then the strange thing is that the owners, the team of Convex has heavy influence. You can delegate the Convex to them, and then they vote, and they vote in the interest of Convex, of course. So this is the reason why I think it's quite sustainable, because what they want, they decide for their pool, because this is also a pool on Curve. It's not. It has been a pool on Uniswap, but now they moved this pool to Curve, and so they vote on the distribution of the Curve for themselves, of course. And this is the reason, I guess, they will also do it in the future, because they have the most influence on this. And yeah, so the way is that if you have Convex, just to explain, if you have Convex, you'd go to a snapshot and then vote for the pool, and then Convex themselves, they vote for you. I don't know if it's our multi-signature, how they do it. Then they vote for you on the Curve platform. And this is also very nice, because now I have normal Curve on vCurve on Curve itself, and then every time you have to pay your the fee if you vote for your pool. And with this, you make a snapshot vote with Curve, and Curve's as a CVX, and then CVX is voting for you. Yeah. Sorry.
Yeah. So the yield is going to be it is going to be quite volatile. It basically depends on the price of Convex. But yeah, I mean, if you believe that the token has long-term value, that you're willing to hold it for more than a year, I think you kind of just ride the waves and accumulate it.
I see. Do you have any like rough estimate of like what the APY is at like the current market cap of Convex? Out of curiosity, just any rough estimate's helpful. Just wondering.
I mean I mean it's really taken off. So the CVX pool is like, yeah, I mean I'm not going to say you're going to be at 70% or whatever for a while. Like I think we probably stabilize like 20 or 30% or something.
Yeah, but I guess if CVX were to go up, then the APY effective that you would have earned as well would have gone up as well. Instead of down. I guess the future like yield could go down, but if the price goes up after having farmed, then the effective yield that you would have earned would go up. Is that right?
Yeah.
Yep, correct. And I can attest, I don't recall the exact numbers, but this has been an incredible farm, how long it's sustained. I remember 20-30%, that was, like a baseline quite a while ago, but this is, it's gone up so much because the CVX token, obviously the price has gone up so much. So Yeah, always going to be an issue we run into where we're probably going to dilute some yields if we're successful. Like when we put a farm up, it's very likely that we are going to dilute certain yields, but hopefully, I think the community that uses it should recognize that over time that that those quoted yields are likely to not to hold, given there's all these different variables that could push it up or push it down. Sorry, Martin, what were you going to say?
No, nothing. I'm completely on your side. No, I just think that the main risk, and we did see this with StakeDAO, or even Jörn had a similar pool.
Yeah,
which,
Jörn briefly tried to control the curve lock.
Yeah, exactly. They made it earlier, but their approach has not been successful, it looks like. And now I personally also have like a curve in the Jörn pool. And the thing is, now it's totally out of balance. So this means that it's only the risk if somebody comes and is stronger than Convex and takes over Convex. But because these tokens are locked like forever, then people will take out the curve again, and then the locked curve will be stuck in the pool. But this only can happen if a stronger competitor is on the table than Convex, and I don't think this will going to happen. I think the position is like undisputed. Yeah. Yeah, nothing else from my side. Other questions?
Yeah, this was super awesome. Thanks for the presentation.
Yeah, I think then Hassan can show us how to farm this. You're muted.
Yeah, sorry. No, mine's not as good as Jeff's. Mine's pretty simple, to be honest. Okay, hold on. Let me present. All right. Can you guys see the screen?
Yes.
Yeah.
Right. And then, like, one thing to note here is, just before we start, is that like there's with the new passage of the ETF, there's been kind of like a semi shift in the market on rates, because the ETF has to go and buy the front month contract. So when it buys the front month contract, and in the size it's buying it, it pushes the future price well above spot. So you're seeing like the 3 month basis at like 16 to 17%, and 2-3 months ago it was 5%. So what's happening is the futures curve is like steepening, and this is impacting yields in the space, because now it's more expensive to borrow, because you can borrow, like, you could go to AV, or you could go to Compound, and you can borrow USDC, USDT at like 7 to 8%, and you can sell the basis for 15, 16%, because the basis is artificially increased by the ETF. So I'm telling you all this to say, like, when you're choosing between like a fixed yield or a variable yield, if you're bullish on rates, and you want like that, you want exposure to rates, you take a variable yield product, right? Because if you think rates are going to keep going, you want variable yield exposure. If you think rates are going to come down, you want to lock in a fixed rate. And so like this is interesting from like our perspective, because this product that I was looking at, I kept it really simple, but this is it's the Curve 3 crypto pool on Element. And so this pool is this token is, or the vault gives you exposure to 1/3 USDT, 1/3 wrapped Bitcoin, and 1/3 ETH. And the fixed rate APR on the vault is 21.5%. So in addition to getting exposure to a third Bitcoin and a third ETH, you're getting 21.5% yield on the token. Let me put this up here so it's easier to see. And essentially, there's two reasons I like this farm. Is one, because like obviously like it's Q4 2021, and we're going to see like a 2017 style Q4, so Bitcoin and ETH are going to go up. And then secondly, and perhaps more importantly, like Element just raised a big round from like A16Z, and my confidence level is like above 80-90% that this is going to have like retroactive rewards if you use the protocol and you deposit assets in the vault. So like that is a big component of why I chose this. I obviously can't give you, like, I don't know how many tokens they're going to distribute retroactively. But obviously I think the bigger size, the more size you put into the trade and the more vaults you use, and obviously the more wallets you use, the more tokens you'll get. So, so basically how this works is, it's essentially taking, it supplies the Curve3 crypto pool to Convex Finance, and you're earning Curve and Convex, and you're selling those rewards for more Curve3 crypto. And what the protocol allows you to do is you can, I'm not suggesting we do this, but you can mint a principal token and a yield token. And the principal token trades at a discount to the underlying until expiration. And the yield token, it's the opposite of the principal token. It starts high and accrues to zero. So basically the principal token is discounted and accrues to one underlying. The yield token starts high and goes down. And the point is that like when you break up one token into a principal component and a yield component, people that are speculating on the future rates can go long on the yield token. And if they're right and yields go up, then they've bought yield down here and they can sell it as the yields increase. And the principal token is just the opposite. Like you can sit in the principal token and initially it starts at a discount, but at expiration, its value accretes to the underlying. So what this is allowing you to do is just kind of sit back and collect a fixed APR while other people are speculating on like future moves and future rates. So it's pretty attractive in that sense. This specific vault expires 11/21/21. So let's just go here and see. Sorry, give me 1 sec here. The internet's slow.
Hassan, I'm pretty sure too that that's one of those opportunities that they'll continue. They've rolled over a number of these, so but good to call that out.
Yeah, no, but thank you. That was actually my next point. Is like you see how it says November 12th, 12/21. Like obviously that's in 3 weeks, right? But they're definitely going to roll this one over because it's a very popular pool, and they've rolled over pretty much every major curve pool that they've had. I can't remember one that they haven't. So even though this is ending in 3 weeks, you'll have to reclaim your tokens, but they'll relaunch the vault and you could restake them. So I don't think this is an opportunity that's going away. The vault APR may change again, depending on like future rates, but like I'm pretty confident it's going to stay above 20. This was 25% a week ago. It's kind of fallen as the yields have gone up. Because remember, like when you take a fixed yield, you're essentially selling the upside to someone who wants to speculate on the rates. So as future rates go up or as rates go up, the fixed APR will fall and vice versa. So, I mean, I really don't have much more other than this. Another reason I thought this was good for AladdinDAO is because it's really simple. You know what I mean? Like you don't have to ask people to do much. It's a simple concept. It's a simple explanation. You basically have 67% exposure to the market via Bitcoin and ETH and a third Tether. So you have some downside protection, and then you're getting like a fixed return on your token. So even if Bitcoin and ETH go down a little bit, you have this cushion, And if Bitcoin and ETH go up, yeah, you don't have as much, you don't have dollar for dollar exposure on the upside, but the fixed APR is kind of compensating you for giving up some of that upside. So I think it's an easy concept for people to like understand and grasp, and it's safer than some of the other farms out there because it's, again, you have exposure to Bitcoin and ETH, and the smart contracts are like Yearn and Curve. So those are two battle tested codes and battle tested protocols. So it's pretty safe. I mean, that's pretty much all I had on this. I did do this in mind with like simplicity. So I'm sorry if it's not as degenerate as some of the other as concepts people are throwing out. But does anyone have any questions, or does anyone want to talk about anything?
Just curious about the roll process. Like, do the users have to do that migration themselves, or will the devs kind of handle that?
Yeah, they do. I have to get back to you on that because actually Element just tweeted, let me see if I can find it. We can come back to this. But like the roll process it does require some manual inputs. So maybe this is not a great one to do until the vault term expires, and you could put it in for like another 3 months. But let's see. Here, let me see if I can Elements. Yeah, this is what I was saying. They just raised it a $320 million valuation, so you could be goddamn sure that they're going to have a token soon.
Yeah.
Okay, so let's see. Okay. How do you roll it over? I don't want to keep people, but I can put it in AladdinDAO. Like I can put it in the Discord as to how you roll it, because you do have to roll it. Shoot.
I have like a very noob question. So the fixed yield you get. So
Yep.
So you. Yeah, I don't know how to even to name it. So if I would farm it myself on Convex, I would get more, I guess.
Yeah, and you would get
so the part I don't get, who is owning this part?
The yield token buyers.
Okay.
Yeah,
it's like an interest rate swap. You're swapping
exactly.
sort of a fixed yield for a variable yield, and some people want the higher upside of like a higher yield, but you get the fixed yield instead.
Okay.
And that's why I started. Thank you, whoever said that. And that's why I started saying like, I think rates are going up, right? Because of like the market structure and the way the ETF works. That's impacting all of crypto. That's impacting a lot of things. So rates are actually going up, and that's another reason that like the fixed rate initially was higher and now is lower. But for our purposes and like our like consumer base, like I would just put them in the fixed rate asset.
Yes. Yeah, it makes sense because fixed rate is fixed rate.
Yeah,
it's also comfortable for us somehow because then we can say, yeah, you get fixed rate. You don't have fluctuation then. Except if it rolls over, then it may change every time, I guess.
Right.
According to the market situation.
And so I am one thing to make note of, like, I do expect when, like, to DeFi Dad's point, like when this vault rolls on November 12th or whatever, like, I do think that the next APR will be in this range of like 18 to 22%. I just think it'll stay low or stay in this range, so it's sustainable. I think this is a sustainable product and it's a simple product.
Yes. Yeah.
But my to-dos are to come back and to explain what the roll process is like, because obviously Element's Twitter page is long and confusing and I need to read it and I don't want to bother people with that. So that's my homework, but I will explain the roll process because that's a good point.
They had like a guide or something.
Yeah,
like
yeah,
recently.
I know. Fuck, I saw it yesterday too. Shit, it's annoying.
Yeah. I couldn't find it either. But I literally just wrote a little tutorial on this like yesterday. Not the same vault, but I think the real the really interesting opportunity here is, aside from like just, I mean, what a great like farm that is, like having exposure to Bitcoin and Ether and still having some stable coins and earning that high fixed rate. I am 99% sure that there has to be some token that's coming from Element. There's no way that any of the investors in that round would have touched it without a token coming. So if we can bet on that, like the greatest upside I've seen in any farms is those airdrops. So this is a really unique opportunity. I don't think we'll be airdrop hunting normally through Aladdin, but like it will be an awesome story for people to tell. Whatever reward it is they earn, I don't know how big of a reward that could be, but it's got to work out.
Yeah. If you bought the here, okay. By the way, this is it. This is the how to remove and redeem. I'm just gonna put it in the Boule members only chat. I will read and do a synopsis, but I also don't recommend. This is just a side note. I don't recommend LPing. Like I don't recommend like adding liquidity to the pool, because it's not enough of like, there's not enough trading going on within the vault to make it worth your time here. So I'll show you. If we go here and we go mint and LP, and I go to the curve pool or this 3 curve crypto. Yeah. It's just like the yield on, like if you're providing liquidity in the YT token, there's no yield, because like it's just the pool super small. And if you're providing liquidity in the principal token, it's 0.76, which is not, with the gas costs and everything, it's just not worth it. So I literally would just deposit the underlying token into the vault, and then people can come, and if they want to speculate and buy it and trade the YT and the PT, that's on them. But for us, like keeping it simple, I would just deposit the token in the portfolio like that. Does that make sense? I would not provide liquidity or do the yield tokens. That's just me though.
Same, but there's no real like additive yield there to earn at the moment.
The juice is not worth the squeeze, and gas costs and everything, it's not worth it.
Exactly.
But you will still get, I'm very, very comfortable saying, if you have anything in your portfolio section here, you're going to get a token. You're going to get the retro drop. Like, I don't know when, but you're going to get it. So you can think about like, are they going to distribute the token based on like how much money you've put in or how many trades you've done? You could think about things like that, but just participate and you'll get the token.
Yeah, I looked today because I did see the rounding that they raised some money. I looked like the second time on the project, and I didn't get it completely how it works. But now, I understand what's going on. It's nice, but the thing is, I think the rollover process is really a pain fast somehow, because I guess they will fix it at some point. That you can just. Yeah, they roll it over for you. But I think, the thing is, normally we don't own I guess it's just technically, we don't own the liquidity token. So if somebody provides the liquidity token to us, we can't move it for them. But this is an issue anyway, on different, I don't get why projects not tackling this.
Yeah.
That you always have to move them by yourself, somehow, but we will see.
For us, I think, like I just put it in the Boule members only chat, like, because we're just basically depositing a principal token into the vault. I think for us, it would be simple. It's just that sentence. If you bought PT and didn't LP, we're not providing liquidity. You just need to redeem your underlying tokens.
Yeah, but I guess every user has to do it.
Yeah.
We can, in a way, you can write code who does it, but then we own the liquidity token.
Right.
We can do this, but then it's very different because then we get real access to the token, and now the token is just given. It's in our contract, but we don't own it. And I guess this is a huge difference in somehow.
Okay.
Yeah. It's just what we all see with other projects. It's not so simple, at the end, the simple idea of AladdinDAO has been, we're just farming, but we see now over the different projects we did see, it's not so simple to farm at the end. It's not that you just take a token and most of the farms who has a high incentive are somehow also like special, like this one.
Right.
But this is it's how it is, sometimes it's like normal that on paper you think it's easy, but then if you gets more complex.
Is anyone other than DeFi Dad using Element and me? What are you guys' thoughts on?
I want to use it now. But I'm not using it right now.
This is an interesting one too. The MIM, the Magic Internet Money 3 curve pool is interesting. Yeah, we'll see. So yeah, any questions or you want to talk about anything?
Yeah, I've been playing around with Pendle as well as Element. Definitely an interesting space. In terms of like actually LPing, it's kind of complicated and confusing.
Yeah, it's definitely confusing, and like people, especially when you're LPing on like the yield tokens, like people don't understand that like the yield token will go to 0 over time, so they don't really they don't understand that like if you're going to trade it, you have to take profit on it because you can't just sit in it, right? So that's an issue. I also think
it's for sure it's product for pros, at the end. It's not for retail. But this is okay. Yeah.
I think the principal tokens are fine. One thing I think that this may be ahead of its time. Like I think Pendle and in general interest rate swaps, they are ahead of their time in crypto for a few reasons. To do a real futures, like a forward curve, and have like implied rates at various expirations on the curve, you need liquidity at each expiration. And the way Pendle is going about it, we're getting off topic here, but I'll keep it short. The way Pendle is going about it is they have like these terms, like, they'll have like 12/31/21 and they'll have 12/31/22. And obviously, like if you're bullish on rates, it'll be more expensive to borrow for a year and a half versus a year. But the problem is no one is actually on Pendle right now. No one is actually providing liquidity in the various in like 3 months and in a year and 3 months, because they're bullish or bearish on rates. They're doing it to get the token, to get the Pendle token. So you have like a big distortion between like what the market rate is and what the implied yield is on the yield token, because people are just providing liquidity for the yield token to get the Pendle. They're not actually doing it because they have a view on rates.
Yes.
And that's fine. But like, I'm just saying, I think these interest rate swaps, it's going to be a thing. I just think we're a little early on it.
Yeah, sounds good.
All right. Thank you, guys.
Cool. I think we hit the hour. That's cool. And I think that's it for this. We vote about this next week, and we will see.
Martin, can I ask the question? Why did we vote no? Why did was there a reason that Orion got voted down, but Lemma, I'm a fan of Lemma, by the way, I'm not shit talking, but like, why did Lemma without a yield, without an actual yield, got voted in, but Orion at 16.5, and it's pretty safe and simple, got voted down?
I don't know. Yeah, I think personally, I guess Orion is just this. I think it's a mental gap. personally, because people have this mental gap that, oh, it's another chain, it's on Luna, and me too. I have it too. So a little bit, my home is Ethereum. And if I did research about Orion, and if I think about Orion, I did research about Luna, how it works, what's going on there. And even then, I don't feel comfortable. And the main reason is I played around with Ethereum, since like ever, and it's my home. And if I think I have to make judgments on another completely different technology or also community, I don't feel that comfortable. It's really my mood. It's just my point, but I guess it's could be one of the reasons, because even I don't think it's true, at the end, because Ethereum, you don't, maybe you have a better risk judgment, and for me, myself, I don't know Luna, I don't know Terra. I think it's a very interesting piece of technology, and maybe has a great future because it's going into maybe it's a stable coin of Cosmos in the future. But anyway, this is just maybe this is just my point. I don't know how others react to this.
Okay, thanks guys.
Yeah.
Bye guys. Talk soon.
Also.
Yeah.
Cheers.
Thank you, Hassan. Thank you, Jeff. Yeah.
Thank you so much. Appreciate the alpha.
Appreciate you guys. Bye.
All right. See you guys next week.
Yes. Thank you guys.
Bye. See you.